Good morning all and welcome to today's video. So today I have four pairs on watch and those are dollar Swiss, dollar yen, Aussie CAD and pound yen. So I'm going to start with my favorite of the bunch and break down dollar Swiss for you. So on the higher time frames, the narrative as I see it is that we have tapped into, look how sharp this hook point is, this area of value, this standout area of value. It's even a standout area of value on the monthly chart, more of a wick there, but on the weekly chart, you can see we had a extremely sharp move down, followed by a very, very sharp move up. And I said to you in yesterday's video that one of the things that I noticed over the weekend, I tend to sit down and study my past trades on a Saturday, is that I noticed that when we have a very, very sharp move like that, followed by a sharp move up, if we tap into that area again, price tends to move with a similar level of aggression, which is obviously a good thing. If we're seeing sharp moves like that, then obviously it's going to make it uh, over a large sample size of trades. It's going to make our trades much easier to manage if we move with this level of aggression. Okay, so what do we have? What happens? What happens is what normally happens is that we come all the way down here. We near miss to this area. We push up. We move up in a very corrective way, most likely because people are buying this whilst the orders that are still down in this area. If it's a sharp move, that implies that there's a lot of liquidity there. That liquidity is likely dragging price down as people are trying to buy this, which is why it tends to move up in a very corrective manner, such as this. If I can just get the paintbrush tool on the chart. So we're always looking at, those of us who trade the Falcon strategy, how price is moving rather than just if it's moving. And then we have, what do we have? We have this low here, which breaks below here, but once again near misses this sharp area of liquidity, giving me a clue, especially as once again we move up in a very corrective manner, that there is the liquidity that is sat down here is likely still dragging price down as these people are trying to buy it. And then what happens? We finally tap into that area and we break just below it, which is what we typically see on the higher time frames. Normally, we would see slightly more of a break below than this, and that is a factor in my thinking as well. But you can see that we have started to have uh, some aggression in the market, okay, which, if we just look at that, is not too dissimilar to what we had last time around when we tapped into that. One of the things that I like about this is that we're now trading above this low here as well. So we're trading above the sharp hook point, above this low as well. And it could be all systems go for a move potentially on the higher time frames all the way up here. This is another reason why I like this, is that we have a near miss to here. And as you've just seen on the flip side, when we have these near misses to a low, they usually get filled and taken out before we move to the upside. So if we've tapped out all these lows now and we're moving to the upside, it's likely that we will take out this near miss to here and this near miss to here. But certainly, we'd be. I've never held through a trade for that long, but certainly we could capitalize on a move up to this consolidation here, which you can even see on the weekly. Okay, where we could look to re-enter if the market gave us permission, even if we only capitalized on a trade up to there. We have a sharp move up followed by a sharp move down. So this is an area, now that we've tapped into all these lows, where I would anticipate not necessarily excuse me, not necessarily a reversal, but certainly some profit taking in this area. So that's why I've got my target there. Okay, as I drill down, you can see that we've had a fairly reliable sequence of corrections. So I'm asking myself, am I well positioned for a move to the upside? Yes, very, very well positioned. What's the sequence been like on the way up? Well, we have this sharp move down here, which is not that typical. So that's a factor in my thinking. But that could have just been more profit taken from people that caught this sell position down to this area, just a bit of profit taken, or perhaps more orders being placed in this area before the move to the upside. But after we break out of this, after this sharp move down, we break out and we form the natural ebb and flow of the market, impulse, correction, continuation. And it starts to look, if I just drill down a second, it starts to look like a more reliable sequence. So these kind of tight corrections into this larger corrections and then tighter corrections. This, to me, there's nothing that fills me with dread or fear about this sequence that may cause anything up here to be unreliable. But what I notice here is that we have this little bit of a running channel. Okay, we break out of the running channel, price comes down, retests the running channel, moves up, and leaves a fairly not that sharp, but a fairly sharp move down, followed by a sharp move up, giving me a clue that that's where price will likely snap back to if we're going to move for further continuation to the upside. There's no kind of sharp moves within here, okay, which gives me a clue that these lows, there's not a lot of liquidity sat at these lows. And one thing we know is that when we have an impulse followed by a correction, and the correction is this wide relative to the move up that has preceded it, often what happens is price just drops out, especially if there's a sharp hook point sat below, and then we tap into that area and then move to the upside. And this is what we call an M style pattern, or an inverse M style pattern, where the correction, so much volume builds up that it gets so wide relative to the impulse that's preceded it that it just drops out. People think it's getting short, it taps into a sharp hook point such as that and then moves to the upside, which confuses a lot of people. So if it's confusing a lot of people, then we're not trading in alignment with the masses. And if we're not trading in alignment with the masses, who are typically losing money, then we're probably more likely to be on the side of the winners, okay, which is what we want to do. We don't want to trade like the herd. We want to trade like the or in alignment with the money flow, okay? The flow which is actually making money, not the flow which is not. And you can see prices starting to drop out now. I'm looking at this correction. I see no sharp moves in there. That tells me there's not a lot of liquidity there, and we'll likely just drop out to this area. So if we do, this may not be ready by the end of the day, but what I'll be looking for is price to tap into this area. I'll be looking for a solid impulse up on the 1 hour chart to give me a clue that the liquidity has been tapped. And then I'll be looking for a 15-minute correction, 6 to 8 15-minute candles. Okay. And then I will look to filter this on the 5-minute chart. I will look to see if I can get a risk entry within the flag. Okay. Minimum 10 pip stop loss. That's the rules. And if I can't get that, if it's just consolidation on the 15-minute chart, 6 to 8 consolidative, I don't even know if that's a word, 15-minute candles, then I would look to get long on the break, and I'd be able to manage this up to the top of this correction for something in the region of 5.5%. I wouldn't anticipate price stopping there because, once again, there's no sharp moves at the top of this correction. So I would anticipate, if we do tap into this and this entry manifests itself, that we will likely just blast to the upside, okay, in alignment with what price did on the higher timeframes when it tapped into that higher timeframe liquidity point last time around. So I have an alert set just below this sharp area of value, and if that is not tapped into, then I'll not be looking to place a trade on this pair. So dollar yen, if I just zoom out, so on the higher timeframes, we have this. If I just zoom left, okay, we have what, according to my data at least, is an all-time high. We tap into that area, but we don't break above. When we have such significant highs such as this, generally speaking, all higher time frame highs, but when we have a really significant one like this, it's usually the case that we will break above before the bigger moves to the downside occur, to take out kind of this near miss to this low and this near miss to this low on the higher degree. Okay, and one of the reasons that makes me think that we're likely gravitating back towards these highs, which we failed to break above last time around, is if we just measure the impulse. So the impulse all the way down to there, we have now retraced approximately 75% of that move. So that's a key indication, once we start breaking past the 50% mark on these less corrective pairs, that we're likely gravitating all the way back to the top to break the highs before the longer term move to the downside. And one of the other clues was these sharp moves up. Look at these sharp moves up, sharp move up, all the way up. These, not so much here, but here we have a very sharp move up. Okay, we tap into a sharp area of liquidity there. It was sharp, so there's likely liquidity there. We tap into that area by way of this reversal structure, and then we move to the upside. So I'm asking myself now, am I positioned for a move to the upside? Am I well positioned? Yes. Once again, we see the same thing as we saw on dollar Swiss, slightly sharp pullback there, but then we see these tight corrections, okay, into this kind of more of a running channel, breaks to the upside. I was looking for shorts in this area as a potential hedge, We didn't get that. Okay, I was looking for that because there was sharp moves here. Price did not find enough liquidity here to send it to the downside, so then I didn't place a trade. We then break above this area of volume here where there was a sharp sell-off, and what happens? We blasted straight through that. Price did not find enough liquidity here to send it to the downside. Instead, it corrected. Price is building volume above this area of value, okay, for a potential move to the upside. Okay, if we were going to head to the downside from here, we likely would have just tapped above and then tapped straight back down. Price didn't do that, so that kind of ties in with the what the dollar is doing across the board, and the fact that I'm looking for longs to break that higher time frame high. So if I just drill down and just being mindful of the time, okay, what I'll be looking for here, what do we have? We have a sharp move down followed by a sharp move up. That's likely where the liquidity is sat. What happens? We near miss to that area. What happens? We come down again. We break below this low, but we near miss to this area again. Okay. And then what happens? We tap into these areas here. We tap into this area here, move to the downside. So what I'll be looking for from this pair, I won't be looking for a risk entry because yes, we kind of have a a 1, 2, 3, but we also have a 1, 2, 3, 4. This is almost a 5-touch structure. Okay, so if we have a 3-touch structure here, then it's more likely that this could be one piece of its own. Okay, so when we go from a correction into a correction, I don't take risk entries from the edge of structure, just because my testing at least has proven that you can be tagged in, tagged out, and then it just keeps moving in this manner. Okay, so if price doesn't commit, so if we get a 1, 2, 3, sometimes we can scoot back down for a double bottom before we go. That is a possibility. But even when the double bottom after a 3-touch structure doesn't commit, then it's likely it increases the risk ever so slightly to be taking a risk entry from the bottom. Okay, from if that's happened. So what I'll be looking for is I'll be looking for price to tap into this area, a push up on the 1 hour again, a 15-minute flag, and then once again I'll be looking to get long either on the break of the flag or with a risk entry on the 5-minute chart within the flag, and then I'll be able to manage it up to, what do we have here? We have a sharp move up followed by a sharp move down. So I'll be able to manage it up to that high as a first inflection point for something in the region of 7%, where in this instance, at least, we could see a move back down just because this move was sharp, whereas on dollar Swiss it wasn't. But we could also blast straight through to these higher time frame targets and that higher time frame high, which I was talking about. So I have an alert set to see if we push back down. If we do not, then no trade for me. On the lower time frames, this looks uh, very nice, Aussie CAD, but we have to zoom out and remember the bigger term, the higher time frame picture. So on the higher time frame, we tap into this area here where there was a sharp move to the upside, price sharp move down, followed by a sharp move up. We rallied aggressively, and we rallied, with the exception of this here, we rallied in a very impulsive way with very few pullbacks. We tap into that area again. Okay, price scoops back down once again. It scooped back down here before going, and it did the same thing here. It scoops back down and then goes. That's why I keep saying when we tap into a liquidity point, we usually move in a similar manner. Okay, then what happens? We tap into, there was a very sharp move up here, followed by a sharp move down, and on the way down, the corrections weren't very steep. It was a very strong sell-off. We tap into that area again, and we move to the downside. Okay, so then what do we see? We tap into this area. We have that impulse correction continuation. And I'm just looking at this. What happens when we broke this low? We consolidated beneath it, giving me a clue that this is not, at this moment in time, of course, things can change, a move which could potentially take place where we tap into this sharp hook point above, and then we have kind of that expanding pattern, okay? It could be that I'm neutral to that, so that is partly why this is lower down on the risk, because on the list, because there's a possibility of that happening. But you can see here evidence of those psychological patterns once again. If I just drill down, the sequence is not as typical. Once again, we've had these kind of sharp pullbacks from the beginning. Okay, so that's a factor in my thinking. But what do we have? We have a consolidation here, which caused a sharp runoff. Okay, And then what happens? We near miss to that area. This is what I call the FOMO channel. People tried to sell this whilst the orders that were still here and being placed in the area dragged price up. So when I did my forecast last night, which was about here, I was anticipating, given that we now had this 1, 2, 3 middle section, that we would likely do this, and that's exactly what's happened. So what are we looking for from this pair? Because of the fact that this could be a move to the upside to take out those to take out this very sharp area of liquidity which was sat above here, okay, because we are trading slightly above here, and because of the fact that the sequence didn't start as typical, okay, so we didn't start with tight flags into other tight flags. We immediately went into a larger correction and then scoot back up again. That increases the risk of the trade down here. So I will not be, even though we do kind of have this 1, 2, potential 3, which taps into here, I'll not be placing a risk entry from the edge of structure, because we would also, just to touch on it, we would be trading above this very sharp move there. Okay, so that increases the risk ever so slightly. Even though this correction looks very nice on the lower time frames, it's important to zoom out and remember the bigger picture. So what I'll be doing in this instance is I'll once again be looking for price to tap. Well, it kind of has tapped into this area now. And what do we have? We have that near miss again. We near miss to the area, price comes back up. Okay, so we see all these little FOMO moves all the time. Of course, not everybody has FOMO that got short here, but a lot of people would have done. So what I've done is I've set a Google Calendar reminder to remind me to check this pair in 2 hours' time, because that would give almost enough time for a 1 hour push down, followed by a 15-minute correction, which I would once again be looking to get short on the break of. Just gone off on euro dollar. Um, that would give enough time for a 15-minute correction to form, and then I would look to get short either on the break of the 15-minute correction or with a risk entry on the 5-minute chart within the flag if I could get that, and then I'll be able to manage it down to this low here for the as a first target. And then of course, if we kept going, then there is potentially about nearly 10% on the table, depending on the size of the stop loss and the entry we get. So that is Aussie CAD. I'm going to quickly move on to pound yen. So pound yen on the higher time frames, you can see, if I just zoom left. So one of the reasons this is lower on the list is because we have a move sat above this area of value or area of inflection. What I do like about this is when we consolidated here last time, the volume that was generated caused a very sharp sell-off with very few steep pullbacks. It was very, very aggressive. And if we do react from that area, we could react in the same manner again. Now, yes, we could take out that higher time frame high, but if you look at this structure, what could be happening is we move to the downside to take out these near misses, okay, before we move to the upside to take out that higher time frame high. So there's potentially a lot of profit potential to be made to the downside in the meantime, even if that was to take place, okay? So what do we have? We have the psychological patterns. Again, we have this 1, 2, 3. Price near misses to the area, scoops back up. It near misses to it again. We come back down. We have these near misses here, which I like. Okay, we tap into the area, but we don't break above ever so much. We just kind of wick above it. What happens? I said to you in yesterday's video that I was looking for price to break above this previous high to tap out those orders that were likely dragging price back up. And what did it do? It didn't do that. It literally reacted from the same area again. So it's no surprise to me if we've not really built up a great deal of volume on the grand scheme of things with the higher time frame in mind. If we've literally just tapped to the same area, it makes sense to me why. You can see what happened. We tapped into the area, moved down, and then we sharply pulled back, likely because there's still orders just above these highs, which are dragging price back up as people are trying to sell this. And we kind of have that M style pattern here. But what I'll be looking for, because we didn't tap above that previous high, what I'll be looking for is I'll be looking for price to break above. Okay, I'll be looking for price to break above and then push down and flag. And then if we do that, I'll be looking for the same as I was looking for on the other pairs. 1 hour push down, 15-minute flag, filter to the 5 for the potential risk entry, and then I'll be able to manage it down to these lows. There is also the possibility of a long at some point, just not in my opinion by the end of the day, because we near missed. Okay, we near missed here to this previous low. So this could be a bull flag where we tap into that area, take out that low which we near missed to, and then we move to the upside to take out that higher time frame high. but we shall see. So that is the thesis. That's what I'm going to be looking for today. If none of these entries shape up, then no trades for me. Thanks for watching, folks. Have a great day, and I'll see you again in the next video.